So you are a beginner and you want to invest in cryptocurrency, or maybe you're an intermediate or somebody that's been in cryptocurrency for a while, but you keep on getting burnt. Well, you're in luck, because in this video, I'm going to show you how to invest in cryptocurrency as a beginner with 25 tips that everybody in crypto can benefit from. By the way, make sure you stay till the end of the video, because I have some really important tips that I need to share that you don't want to miss. Subscribe down below, hit the like button, and let's get started. Tip number 1, forget getting rich quick. Listen, all these paid groups are pump and dumps. And whenever you see somebody talking about cryptocurrency, usually a low cap cryptocurrency, telling you to buy, telling you, look at the price is going up like crazy, guess what? It's a pump and dump. And what this means is the price goes up really quickly because of low liquidity, and as everybody's buying, they're selling. And if you try to sell yourself, guess what? There won't be no liquidity left. By the way, this reminds me of something very important I have to tell you at the end of the video, so make sure you watch till the end of the video, not just for the tips, but that important thing. It's gonna benefit you greatly and you don't wanna miss it. Tip number 2, a controversial one, listen to the big boys in crypto, not the small channels. I know, but hear me out. It's controversial. But if you're gonna listen to anybody on YouTube, you wanna listen to big channels. See, small channels don't have anything to lose. They just copy the big channels most of the time. YouTubers do this as well in other industries. And they're more subtle to just accepting any deal as soon as they see their first paycheck from sponsors, and are willing to not disclose. They have more risk, if you will, less experience, and so on. While the biggest channels have a lot more to lose. It's a living for them. Number 3, be wary of YouTubers doing TA. Listen, most YouTubers have no idea how to do TA. They either recently learned or they're just doing it for the views. And if they're doing it for the views, they're giving you daily charts. Well, guess what? You're not a day trader. All that's doing is getting you excited or making you fearful and making you make wrong decisions. Which leads me to number 4. If you're gonna listen to someone on YouTube, listen to somebody that's a bit older, not teenagers or people that are too young. Oh, bro, you're just a boomer and young people are closer to the tech, they know more things. Just listen here. Hear me out here. Imagine you're a teenager on TikTok talking about cryptocurrency. And I'll give you an age of 18 years old. Not only have you not lived yet, not only do you probably have no responsibilities, when did you learn about finance and technical analysis and cryptocurrency? It takes about 3 to 5 years. You were 12 years old? Look, when it comes to finances, you want to listen to older people, and even then, you want to verify and do your own research. Don't trust teenagers and TikTokers. It just doesn't make sense. And if you're going to trust a YouTuber, make sure he has a credible reputation. Number 5, do not chase pumps. Listen, we get excited when we see the price pumping like crazy, but do not chase them. Always wait for the price to come to your levels. Now, there is a case for buying breakouts, but that's a total different thing. If you see the price went up 20, 30%, wait for a retest. No rush. It will always dip, probably more than you expect. And number 6, wait for dips. That kind of rhymes. When you invest in cryptocurrency, please understand that cryptocurrency goes down, as we've seen in the bear market. Now, in bull market, it's very common for Bitcoin and other cryptocurrencies to go down 30, 40% and sometimes more. Don't rush. You're in here for the long term. Wait for the dips in bull markets. Number 7, realize what FUD and FOMO is. FUD is fear, uncertainty, and doubt. FOMO is fear of missing out. 2 emotions that can wreck you. The problem is when certain information comes out in a project and people like me and other credible people warn you, everyone starts saying, FUD, 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 FUD. Sometimes it's not FUD, it's fact, and it's information you should know. Learn the difference and don't fall for it. Number 8, don't be a pig. What do I mean by don't be a pig? Well, bulls make money, bears make money, pigs get slaughtered. What that means is if you are bullish, you go long, you can make money. If you are bearish, you go short, you can make money. Pigs get slaughtered because they are greedy. Either direction you go, always take profits. Number 9, when to sell most of your positions. Remember when I told you bulls make money, bears make money, and pigs get slaughtered? Well, if you don't know TA or you want to confirm TA, watch out for this. As soon as your Uber driver starts talking about his crypto profits and how he's going to retire, or your grandma asks you how to buy Bitcoin, get out the market. When you see a lot of people excited, when you see a lot of people FOMOing, when there's so much certainty, when everything is hyper parabolic, when people start saying this time will be different, sell, get out the markets, or at least sell enough to get you by. Every single time we go into a bear market, people get wrecked. Most people get wrecked. So a good sign is when most people are buying cryptocurrency that you wouldn't expect. Dog comes barking, I want my Dogecoin. Number 10, and this is something everybody warns you about all the time, not your keys, not your crypto. This means you need to keep custody of your cryptocurrency. You need to own it. That means don't keep it in a centralized exchange. I mean, we've seen people lose their money all the time. Look at FTX, look at Celsius. I've warned against this. Get yourself an online wallet like Exodus.io or MetaMask, or get yourself a hard wallet like Ledger Nano S and make sure you learn how to use it and get your cryptocurrency on there. Don't leave your cryptocurrency on an exchange. And by the way, if you want to check out a really cool new hardware wallet, make sure you watch this video linked here or at the end of the video. It's really cool. And number 11, learn basic TA, technical analysis. Now, I'm not telling you to master TA, although that would be recommended. But if you're an investor, you only need the basics. It will help you on your buying decisions, and it will help you on your selling decisions, when to enter and exit and how to manage risk and risk-reward ratios. Do not underestimate this. The best investors in the world do know basic TA, contrary to what most people will tell you out there. And number 12, never jump in a pond with both feet. You just don't know how deep it is. If you're gonna invest in cryptocurrency, don't go all in. Start investing slow. Test the waters. See how it is. See how it works. Number 13, and this is one that gets a lot of people wrecked. Don't trade in a bear market like you would in a bull market. I warned about this a couple of times before the previous bear market. When you are in a bull market and the trend is confirmed, Bitcoin and cryptocurrencies tend to have 30-40% dips and go back up. And even if you get something wrong, chances are it will still go up. You just throw a dart, pick a cryptocurrency, you'll make money. Well, in bear markets, this is not the case. You buy the dip, it dips more. Then you buy the next dip, dips even more. Then the other dip keeps on dipping. And you just get wrecked. All these people telling you to always buy the dip, don't do it. Number 14, focusing on the wrong type of performance. Listen, there is short-time investing and there is long-time investing. If you're investing short-term, don't do long-term analysis. If you're investing long-term, don't do short-term analysis. This goes back to listening to people doing TA on YouTube. They're doing short-term analysis. Don't listen to them if you're doing long-term investing. You're gonna get burnt. You just are. Number 15, manage your risk. I'm not going to get into risk-reward ratios here, but I am going to tell you this. When you tell people to invest what they can lose, like most YouTubers out there, it's actually bad advice. See, when you tell most people this, they keep money for going out and eating cake, going to bars, and spending money on things that will never give them back. Their mindset is, I'm not willing to lose this because I want to buy the new PlayStation and 15 games for it. Well, that's not really good, is it? I mean, you'd be better off just buying Bitcoin. Even if it goes down, you're saving money until the next time it goes up. And even if it doesn't, you still saved money. In the other instance, you're just throwing it away. So forget this not willing to lose crap. Invest what you are willing to live without and make sure you diversify in other assets. And talking about diversifying, number 16, make sure you know how to diversify. Diversifying in some other cryptocurrencies is all great and dandy, but you mostly do that so you can take profits from altcoins and put them into Bitcoin, or take profits and put them into USD or any currency you want. But that's not real diversification because it's all cryptocurrency. Real diversification would be stocks, gold, crypto, and so on. That's diversifying. Diversifying in one sector is not diversification. Number 18, don't listen to news. Let me explain. There's news for the classes and news for the masses. You're never gonna get the news from the classes. You're always gonna get the news for the masses, which is what they want you to know. The news is controlled. Or you're gonna hear the reason of a dump or pump after the event already happened, and they're gonna blame this and that, and it doesn't really work that way. Your only chance to understand what's going on before the news comes out is through TA, and you have to be really good at it. Also, if you're watching news all the time and trading off it, you're gonna make so many mistakes from fear and missing out, and it's just nuts. Take your positions, do your analysis, and then take your profits when it's time. Be extremely wary of news. Now, don't get me wrong, there's valuable information out there you need to know. Just make sure you don't fall into all the noise. Number 18, make sure you gather your information from several different sources. When you hear about a cryptocurrency you want to invest in, you want to look at its fundamentals, look at the team, and do your technical analysis. But you want to verify this with different sources because somebody out there might have some different information that you don't know. For example, the crypto factor. Subscribe down below and hit the bell notification button so you don't miss that. Number 19 is giving custody for profit. Now, I warned you about this a little bit earlier, but I didn't really get into it or explain it. All this yield in cryptocurrency is extremely dangerous, especially the very high yield projects out there. They're all gonna crash, and the yield you get is in their token, which is probably worth crap anyway, or will be worth crap at some point. You lock your tokens or you give away custody, and guess what? They go bankrupt, they exit scam, you're left with holding your in your hand. Even these huge companies where you can hold Bitcoin and get yield on that, BlockFi, Celsius. Well, you saw what happened to Celsius. You saw what happened to Voyager. You saw what happened to FTX. How much more warnings do you need? As I said, not your keys, not your crypto. Do not give people custody and control over your crypto, period. Number 20, stop trying to time the market, meaning buying the extreme low or the extreme high. Although it's possible, it's extremely hard to do. And most people don't understand what that means anyway. See, capitulation is a range, it's not a price. So most people wait for a certain price, but miss the bottom of the market because they're supposed to look for a range. If you were buying Bitcoin consistently every month, you'd probably be a millionaire right now, or even billionaire depending on when you started. Just make sure you don't forget the rule about buying when there's hype in the market and your grandmother is buying Bitcoin. Buy when there is fear and when everybody's telling you to get out. That's when you start buying, but not jumping in with both feet. Number 21, buying high and selling low. Okay, I know this sounds like common sense, but first of all, common sense is not that common. And second of all, emotion dwarfs all logic. You're gonna feel like selling when everything is going down, and you're gonna feel like buying when everything is going up. Be a contrarian. Do the opposite. Buy when everyone's selling, sell when everyone's buying. Number 22, over trading. Trading too much and too often. So you made an investment and you try to trade it every single day. You try to buy it, you try to sell it, you get into something else, you allocate it somewhere else. You're over trading. It usually takes time to benefit from investing strategies. You don't need to modify your portfolio all the time anytime a new project comes out. Just don't do it. Stick to your guns. Because oftentimes what's gonna happen, there's gonna be hype over here, you're gonna get into that, but then there's gonna be hype where you were. So you have to be very wary and very careful. Do not overtrade. I'm not even gonna talk about the fees and the emotional distress here. Don't overtrade. Number 23, neglecting to start or continue investing. Listen, so many people want to invest in Bitcoin. I get calls all the time from friends every time there's a bull market, and they never get in. And I get even more calls when Bitcoin starts going down, and they never get in. And I understand the price might go lower, the price might go higher, but guess what? Usually it amounts to them never ever getting in because the price can go even lower and they get really scared and they never invest in Bitcoin. A few years later, Bitcoin goes up and they call me again asking me if they should get in again. They never got in. If you want to invest in Bitcoin, gold, stocks, anything you want to invest in, start. Again, you don't have to jump in with both feet. You can put in a little bit of money that you're willing to lose, and you can start your journey, even if it's a couple of dollars. Otherwise, chances are you'll never start it. Which brings me to number 24. Altcoins will make you rich, but Bitcoin can make you wealthy. Let me explain. Altcoins tend to go up a lot more than Bitcoin in bull markets and a lot lower in bear markets. But they're also a lot more risky and can vanish from the face of the earth. Bitcoin has proven 13 years that it's in an uptrend and has the most potential to bounce back up and reach its all-time highs than any other cryptocurrency. And I understand a lot of time it seems boring, but because it tends to fall lower than all other cryptocurrencies, it preserves your wealth more than other cryptocurrencies. It's also not likely to vanish like other cryptocurrencies. So you want to be taking profits and maybe take it in USD or Euro, whatever you want to live, but you also want to be taking profits into Bitcoin because Bitcoin will preserve your wealth. Plus, you can buy things with Bitcoin, there's always liquidity, and so on. Which brings me to the final tip that's extremely important, and that is doing your own research. But the problem here is you don't know how to do your own research. Everyone's saying do your own research, but they're not telling you how. Well, there is actually a way to do your own research very fast, very simple, and you don't have a big learning curve. You can actually do this in maybe under 10 minutes. And if you want to discover how you can do that, make sure you watch this video right here. And if you want to watch the wallet video, the wallet I was talking about earlier on, make sure you watch this video right here. Subscribe, and I'll see you in the next video.